Hello and welcome to Halftime Report. I'm Sonal Bhutra and with me are Ekta Batra and Manglam Malu. Hey guys, good afternoon. Another day where we did see some weakness, at least when we started our trading session. There has been some recovery, but there are no follow-on gains, so to say, as far as the Nifty moves are concerned. So 25 points higher there. Mid-cap index, they continue to lag. Bank Nifty too in the red today, down 0.2%. So across sectoral movers, we have seen that realty index is down another 1% today. It's down 4% this week, 20% off this 52-week high as well. So there is a lot of pressure that we are seeing in some of these real estate stocks. But the expiry day today, so a lot of action is what we're expecting.
A lot of action is what we're expecting because it's the expiry day, but it serves the cause of all the option writers for the markets to just stay in a bit of a range, because when the markets are in a range, those who've sold options actually make the most amount of money. Now, I just have three letters to say: ITC. Just look at that stock, up 2.5%, 10 rupees higher, 394 rupees. I mean, who would have thought about 11 months ago, that after the stock did not move for virtually 8 to 9 years, that it would be the biggest gainer, not just in the previous calendar year, but this calendar year as well. Closing in on that 400 rupee mark. And that's actually the one which is supporting the Nifty as well, at a time when the Nifty bank is down 100 points, Ekta.
Absolutely, Manglam, that was a part of my chat today, that ITC is smoking hot. So you have ITC, which is up around 18.7% on a year-to-date basis, while the markets definitely have recovered from the intraday low of 17,455. So that possibly becomes a key support to watch out for on the downside. And we have the India VIX, which is down around 4% You do have ITC, which is really taking your breath away in terms of that individual move that we're seeing on specific stocks. Financials, do watch out for that, because yes, it is consolidating, but it is still consolidating with a negative bias. We have the Bank Nifty, which is lost out for multiple sessions, around 4 to 5 consecutive sessions that it's been in the red, and it slipped below that 40,000 mark yesterday and continues to trade below those levels in today's trading session. So yes, it's down around 0.3%, but it's still in the red, still underperforming, and below that 40,000 mark for the Bank Nifty. Important to note where the financials would go in the next couple of trading sessions. But let's talk about one specific stock, Wockhardt. It posted what was a weak set of Q3 FY23 numbers as the margins witnessed significant pressure. The stock is down over 40% in just the last 1 year, or from its 52-week high. To discuss a couple of key takeaways from their analyst meet, which they held after a very long time, we have with us Dr. Karakiwala, who's the chairman of Wockhardt, who's joining in. Hi, sir. Thank you very much for taking the time out. Well, I was listening in to your analyst call, and one of the key questions which repeatedly came up was about your antibiotic, which is under development, WCK-5222. It has been used on a compassionate basis in 3 cases in India, and that too successfully. Currently, it is going through global phase 3 trials, or global trials at this point in time. Can you tell us when would we see formidable results? It's possibly coming into market, and by when?
Thank you very much, Ekta, for this question about WCK-5222. As you rightly said, that it has gone into phase 3 clinical trial and used for compassionate use. The importance of compassionate use, first I must highlight that it has proven in the most difficult cases where no other antibiotic works, 5222 has worked and saved 3 lives. Phase 3 clinical trial, we expect to get it over by within 15 to 18 months. And thereafter, we expect that by mid-2025, the product will get approved and it would be ready for global market. We expect that it would be first marketed in the US, followed by other countries like India, Europe, and China.
Okay. Based on the fact that it has seen some positive results, is there any possibility of monetizing it already? Are you seeing interest coming in from global companies on a possible licensing, or maybe even Indian companies on a possible licensing agreement?
Yeah, we will be looking at the option of licensing and monetizing, because we do not have presence in all the markets in the world. So accepting India and maybe US and few other markets, we would certainly like to license the product. in other markets. We are also looking at an option to monetize with a global pharma company who has a global presence. And maybe we would retain India operation and market for the rest of the world.
Okay. Okay. Dr. Khurakiwala, can you tell us how big is an opportunity in this antibiotic drug that you're talking about? And you're talking about exports here as well. After you get the approvals in place, how big is this market?
I think we had done a Grant Thomson study about 2-3 years back, and they projected a value proposition of $1.5 billion for WCK-5222. Since then, CDC in US have taken out a report sometime few months back, which highlighted that these resistance have significantly increased because of COVID. And it has gone up by 30 to 80%. So we believe that what they had projected a few years back is very much valid. In fact, it would be much better.
Right. Mr. Khurakiwala, just wanted to understand what's the kind of investment that is required for this further investment and how are you planning to fund it? Because there is word that you are also looking to fund this by selling some of the non-core assets. Could you give us a sense what these assets are and the kind of investment that is required?
I think to complete phase 3 clinical trial, we'll need another $30 million to complete it because we have already spent significant amount of investment in earlier clinical trials of phase 1, preclinical, and various safety trials. And we intend to monetize some of the non-performing assets we are having in the company at various levels to fund it. And partly we are also looking at the option where one can receive some early monetization of the molecule itself with some of the potential partners.
What these assets are, you said you're looking to monetize some of the non-core assets. I mean, just broadly, if you could tell us.
These are physical assets, basically, not the business part of it. Okay, we have manufacturing facilities in Lalru, Punjab, which we are not utilizing. Some of such assets are there, some lands are there in the company. So we planning to monetize some of those.
Okay. Would you look to monetize any kind of brands within your India business further, actually, because you've already sold a couple of brands to Dr. Reddy's in the past?
Yeah, we sold a part of our business to Dr. Reddy 3 years back. We are not planning at this point in time to monetize any of the business part of the asset.
Okay.
Oh. Okay, so you have a licensing deal with one of your molecules in China as well. Have you received the milestone payments? How much of it is received and how much is left?
I think we had some milestone payment of some 30 million, and I think we have received about more than 1/3 of that payment so far. And the balance will be coming, basically, as the progress of the research work takes place.
What is the peak sales that we can expect from the serum tie-up that you have for vaccines? You have indicated that they have approved 2 vaccines. When can it come to market? And what is the potential peak sales of this tie-up?
We expect these vaccines to be marketed within 12 months or so, initiate production, after approval of facilities and biobatches and other requirements. And it is an agreement for 150 million doses. Serum will gradually ramp up the production. They have not given us the indication, but we believe in the peak production would be there of 150 million doses with their next 3 to 5 years.
Okay, in the next 3 to 5 years. Just a quick last question.
And the revenue is a two form of revenue will be there and profitability. One is a manufacturing related and second would be profit sharing 51/49 of whatever they will sell.
Okay, so you have a profit share in addition to the manufacturing revenue. That's interesting to know. Dr. Khurakiwala, this is a point of discussion which we've had since 2013. I know you're doing only third-party manufacturing and selling in the US markets now, but I just wanted to get a sense in terms of where the compliance status stands for a lot of your plants. Have you stopped remediating for the US completely? And can you give us an update in terms of the regulatory compliance status by other regulators ex of the US?
I must mention to you at the very outset, all our facilities in full compliance with all other regulators, including EMEA, that is European and UK regulators, all our facilities. As far as the US issue is concerned, we are not manufacturing any product in the company. MGP were manufacturing some products, so we have discontinued it. And we are revisiting the whole compliance as far as the pharmaceutical is concerned. And we will take an appropriate call in terms of historical part of the compliance. But as far as the current business is concerned, it is dealing with the compliance of the US FDA. And we don't expect in the next couple of years, we would have an issue arising out of supplies from our own facility in pharmaceutical.
Right. Dr. Khurakiwala, just one bit on WCK-522 itself. How long will it be patented for, or exclusivity were this to actually, go to the markets? Would you have any sense on this?
Yeah, we could tell you that as far as the patent protection is available to us in the Western market, that is US and Europe, where major revenue and profitability will be there, is up to 2037. So we have a fairly long period of more than 12 years available, 12 to 14 years available after the product gets approved.
And this would be what, 60-70% gross margins?
Gross margin is much more than 60-70% in drug discovery space.
All right, Dr. Khurakiwala, thank you very much for joining in and talking to us. Well, the world is your oyster if you get that one drug out, which could be patented and which could be for the regulated markets. And not to mention that, it could be an antibiotic which could solve a lot of drug-resistant bacteria in the world, which is one of the big problems that we're facing. But nonetheless, that's on walk hard. Stock up around 0.3%. Interesting to note that WCK-522 has been used 3 times on a compassionate basis. Well, we need to take a short break. On the other side, we'll put the focus on the big story of the day, Zee Entertainment, which is under pressure after NCLT admits the insolvency. Back, well, it is GAIL which is in focus. It is higher in trade post a fresh brokerage note from CLSA. Sonal is here with the details. Sonal, tell us more.
Well, there are a couple of positive triggers for GAIL, and that is what CLSA is highlighting. They say that they are increasing the target price to 125 rupees a share versus 110 earlier. So the company had put out a proposal to increase their tariffs on their pipelines. CLSA is expecting 40%, and that's why they have increased EPS by 14% for the company in the next financial year. GAIL has had earlier proposed an integrated tariff hike for all their pipelines in their transmission network. They had asked for a 70% hike, but the consultation paper from the PNGRB did not approve all of those hikes. So there is an expectation that the price hike or the tariff hike could be between 40 to 50%. Even that is a positive, and that is what CLSA is talking about. The tariff hikes on the pipeline business will be very positive for the company. Other than that, they expect it to come by mid-March because there is an open house on 6th of March. The utility business, which is actually a stable business for the company, which includes pipeline, there the share of EBITDA is expected to rise to 58% of the total EBITDA for the company. Earlier, it used to be the gas marketing segment, the most volatile segment of the company, very cyclical in nature. But from there, the SOTP contribution has come down to only 19 to 20%. Whereas the utility business contribution to the share of some of the parts of the share price has come to 80%. So that means more stability as far as earnings is concerned. So these are a couple of triggers that CLSA is very bullish about, and that's why they have a buy rating on the stock.
All right, so thanks a lot for that. So that's about GAIL up around 3% in today's trading session. One of those outperformers in today's trading session as well. Orient Cement is the other one which is in focus on the back of a deal with Adani Power. Nigel joins in with the details. Nigel.
Well, just to rewind to 2021, Adani Power Maharashtra, they had signed a non-binding MOU with the Orient Cement. And the plan out then was to go ahead and set up a cement capacity here in Maharashtra. However, they've updated the exchanges that this deal is not going to be going ahead. That's because Adani Power has requested them that there's been a lapse in terms of timing, and the requisite permissions as well have not come through. So on the back of that, they're not going to go ahead with that. The street was hoping that maybe, in fact, they'll come out with a plan of close to around 2 million tons odd. But that's not happened, and none of the analysts really had baked in any kind of any of this into their valuation. So in that sense, not a big negative. But for Orient Cement's perspective, we'll be watching out for them to come out with a detailed plan as well as the capex as well. So we'll wait by for that. But for the time being, we know that this MOU that was signed a couple of years back with the Adani Power Maharashtra is not going through. Back to you.
Okay, all right, Nigel. Thanks very much for that. Time for a break now. But up next, Ashish Kyal will join in to tell us how he's approaching the market.
The market is, just trudging along between red and green right now as we speak. The Nifty is in the red and the Nifty Bank is in a deeper shade of red. It's down almost 182 points, virtually at the low point of trade. So important to see where, it goes from here as well, primarily because it is the Feb series FNO expiry today. If we just take a look at the indices, we have the Nifty, which is mildly flat. We have the Nifty Bank, which is down 0.4%. And that is the reason why the Nifty is flat is largely courtesy some of the heavyweights which are doing well, case in point ITC as well as Reliance. The Nifty Bank as well as the Nifty, both of them are below the 200-day exponential moving average. So that's acting as a bit of a resistance on the way up every time we're trying to inch closer, upwards of 40,000 for the Nifty Bank and 17,592 for the Nifty itself. However, if you just take a look at the way option writers have positioned themselves, they don't believe the Nifty to move too much beyond this 17,500 to 17,600 range. In fact, 17,550 where we are at right now would perhaps be the perfect place for them to make the most amount of money. Why do I say that? Because the 17,500 put writers have added almost a crore shares in open interest for a premium of 13 rupees. 17,600 call writers, they too have been, constantly writing that strike as we speak. Almost a crore shares written on the 17,600 call as well. Together, the premium on both the 17,600 call and the 17,500 put is close to 30 odd rupees. So that's telling you that the option writers are eyeing a range between 17,470 and 17,630 for expiry today. 17,550 right in the middle. So they make about 30 rupees per straddle that they've sold. Eka.
Okay, well, let's get Ashish of Wave Strategy Advisors, who's joining in now to talk about the technicals of the market. Ashish, hi, welcome to the show. Well, we're going to start talking about the markets with ITC. Wanted your thoughts in terms of the strength that we've seen for the particular counter. What might you be advising clients? Do you see those 400 levels coming through?
Hi, afternoon to you and all the viewers. Actually, one of the stock picks which I was going to give was ITC, because this is one stock that has been bucking the trend over past 5 days. We can see some kind of a selling pressure across the board, but ITC is the one because of which index is at least protecting that budget day low around 17,350. So overall, I think ITC is a very strong stock, relatively outperforming. It is able to form a low around that time cycle zone which we have been expecting, and I think the upside target over short term for ITC is at 421, and one can maintain a stop loss at 380. And from the medium term perspective, if one can use dips as a buying opportunity, I think this stock has many more milestones to achieve and possibly cross that 500 levels over the year's time as well.
Okay, so that's an ITC. Ashish, what is your view on the index, especially in the light of it being an expiry day today?
On the index, we are seeing some selling pressure. In the past 5 days, index has not managed to close above its prior day's high. That's a very simple way of trend following, which has not happened. So the overall tone is still on the downside. Having said that, if you look at 17,350 to 17,450, that's the zone from where it bounced back on 30th of Jan. Again, on the budget day, 350 was the low on Nifty. Again, the next day, it formed a low around that 17,400 mark and bounced back. So this is a very important price action area. I think 17,400 might remain protected on the downside. And over short run, we need to break that level of 17,620 on the upside for some positive trend to emerge. Looks like that we might expire in the range around 17,550 to 17,600 as of now, and break above 17,620 might give the much needed relief rally towards 17,700 level.
Okay, all right, Ashish, thank you so much for joining us. That's a technical check on the market. With that, we'll sip into a short break. And in our special segment, Inside Edge, we'll put focus on Sonata Software, which is buzzing in trade after its biggest ever acquisition. It's lower on the Nifty right now at that 17,540 mark. Broader markets, they are under a bit of pressure. So 0.4% gone for the mid-cap index. And a couple of these names, the likes of IEX, that should come up for you on the screen, has been an underperformer. Though this week it is up 5%, but today it's seeing some profit taking. So at the lows of the day, that's IEX. Ashok Cleveland is also the one which is down 2.5%, and this week it's down 6%. NMDC is the other one, has been in focus on back of some news flow. This week down 5.5% and is adding on to those losses that we've seen on this particular stock. But let's talk about some stocks which are on the higher side as well. This is our special segment, Inside Edge. We'll put focus on Sonata Software, which is higher in trade as the company has acquired Quant Systems. Manglam, tell us more.
Well, I'll tell you about the acquisition. It's the largest acquisition in the history of Sonata Software. Quant Systems is a Texas-based quant company, tech company, for which the payment terms will be in this manner. First up, upfront, they will pay about $65 million odd. Secondly, over 2 years, the next 2 years, the payment would be about $95 million based on some achievements, etc. And then there would be some performance-based payments as well. Now, Quant Systems actually has a revenue of just around $37 million in CY22, but on a low base of $8 million in CY20, it's actually quadrupled. So the question is, how big that does it get for for Sonata Software, which already does revenues of over 2,100 crores per quarter. We spoke with the management, Samir Dhar, and he says that it could actually be 1/6 of the company's overall revenue. So that's the scalability that he's talking about. In terms of margins as well, it could be margin accretive, primarily because they get access to a lot of Fortune 500 clients, and in fact 2 of those clients could actually come into the company's top 5 clients already. Part of the street was sussing that deal in itself because the stock was up 14% ahead of the announcement of this deal, and post-announcement we are seeing another 4.5-5% up move on that stock. So we're talking about the Insight Edge. So let's get that insight straight from Samir Dhar, who's the MD and CEO of Sonata Software.
The market that we serve as Sonata, the modernization story that we have talked to you earlier as well, continues to resonate with our clients. So we're very optimistic about the market trends and what market holds for companies like us as we move forward. Now, clearly, Quant is a growth acquisition. This is all about growth and accelerating growth for Sonata. It's one of the largest acquisition. In fact, it is the largest acquisition for Sonata to date. What it brings to us is really 3 things. Number one, we've talked about diversifying a business into healthcare, life sciences, and banking and financial services. So the clients that they have really give us a very solid footing into the healthcare, life sciences, and banking financial services industry. And it's a very important area for us because that's the predominant spenders of IT in the digital space. That's one key focus for us. The second is their clients will break into top 5 of our clients. So 2 of their clients will break into top 5 of Sonata, 1 banking client and 1 healthcare client. And they're both Fortune 500 companies, and that gives us a headroom to grow into those accounts as we move forward, so that we can leverage our capabilities and joint capabilities of Quant and Sonata, and really blow these accounts out from a growth perspective. And number 3, the capabilities that these Quant teams have, enterprise data, data privacy, Salesforce.com, cybersecurity. Those are all areas which our clients continue to invest. So we believe, again, that's a third vector which we believe will continue to grow. So in summary, it's really all about growth, to accelerate growth, and hence we're very bullish about this acquisition as we move forward. It's been a creative acquisition from a margin profile perspective, and it's not surprising because they are in a niche area, and it's a niche area which is fast growing. There isn't a conversation in the cloud space today which is devoid of data privacy, cybersecurity, enterprise data. So they're really in the heart of the action from a Fortune 500 perspective. So yes, it is a creative from a Sonata perspective. Like I said, they are about mid-30s EBITDA. So it's accretive. And we think that that momentum will continue even as we invest back in this business to further accelerate the growth. We believe that Quant will contribute a creative investment from an EBITDA perspective.
Okay, that's on Sonata Software. The stock is up around 4% but it has become worse for the markets just in the past couple of minutes. We have the Bank Nifty, which is now down close to 200 odd points. The Nifty is still being resilient. Remember that we had an intraday low of around 17,455. So let's see whether we manage to retest those lows. As of now, the Nifty is holding at around 17,533. For the Bank Nifty, that's really where the key problem is, because now on an absolute basis, the Bank Nifty is at 39,814. Maybe we can pull up all the constituents of the Bank Nifty because, yesterday at least we had all of the constituents of the Bank Nifty in the red. As of now, we have stocks such as Indices Bank, Bank of Baroda, HDFC Bank, AU Small Finance Bank, all of them trading with cuts at this point in time. A couple, such as State Bank of India, PNB, which are managing to hold their head above the water. Let's see whether that sustains or not. As of now, it is definitely the financials which one needs to take note of, and the incremental weakness that we are seeing in the Bank Nifty. Take a short break. We'll get you more on the markets once we're back. Stay tuned.
Is virtually at the low point of trade, firmly below that 17,550 mark as well. Apart from the Nifty Bank, which is now down 200 points, we have L&T, which has moved to the low point as well, so pressurizing it on the downside. We have Titan, which has moved to the low point as well, and Adani Ent continues its march downward. For the stock, it's down 21% this week so far. But just keep an eye out on the broader markets too. The advance decline, we started with advances being firmly in favor of declines, but now just in the last half an hour or so, we've had those lines intersect and the decliners are firmly above the advancers. We have around 1,500 stocks declining for 1,300 which are advancing. So that tells you about the weakness and the mood of the market itself. But Ekta, you're tracking something interesting in the pharmaceutical space.
Well, yes, and it is disappointing because it's another dent to the entire Indian pharmaceutical industry when it comes to the US FDA. Well, this is for an unlisted company which we have been tracking. It's a Chennai-based company called Global Pharma. Just a couple of weeks ago, they were in the dock because their artificial tears, which are manufactured by them, were in the US recalled by the US drug regulator, and there was a warning which was put out by the US drug regulator because it was linked to over 50 adverse events when patients use them. So when patients use them, it resulted in hospitalization for some, it resulted in vision loss, it has resulted in one fatality as well, because these products are allegedly linked to a drug-resistant bacteria in them and is manufactured by Global Pharma. The fresh news is that the US FDA has extended the warning and has expanded the warning to the eye ointment, which is manufactured by Global Pharma as well. This is also used for lubrication of the eyes and is definitely a negative because now this particular set of drugs will also be recalled in the US.
Already, this is scary, but we will monitor this.
The show is Chirag Sheth. He's Principal Consultant South Asia at Metal Focus. Chirag, hi, good to have you. We've seen a constant decline continuing for the gold and silver prices, making lower lows rather on the charts. And I'll start with gold first. And we've broken below $1,830 per ounce as well, from $1,960 off a high in the month of Jan to where we are trading right now is nearly $100 plus kind of a decline. And with the markets looking at strong US economic data and the fact that there could be further rate hikes is what really seems to be bothering this sector. What is your expectation, one, on the dollar index and two, on where the gold prices could go?
So, Manisha, as you are aware, we were a bit surprised with the kind of rally that we saw in Jan and, essentially December and Jan. But we've been saying that, probably market is pricing a bit ahead of itself, given the fact that they were expecting, Fed to cut aggressively this year. Whereas, the Fed posturing was very much towards the fact that they would look at data and then take a call. So now what is interestingly happening is that the entire trade of January and December is getting unwounded. You have a situation where the market is now trying to price in, as you mentioned, probably two rate hikes. More and more banks are now saying that, there is a possibility of two rate hikes this year, and then Fed would hold interest rates. So our sense is that, prices are still elevated. They should head lower by the end of the year, and we could easily see, a sharp decline starting maybe, April, May 2023.
And what kind of a sharp decline are we anticipating? What kind of levels are you targeting by the end of this year?
So we believe, Manisha, that prices should ideally trade below $1,700 for this year. We could easily see $1,650, $1,600 kind of range, by end of the year. However, most likely $1,700 should be breached. Given the fundamentals that are now shaping, positive economic data, that gives ammunition to Fed to hold interest rates. And I think if that happens, then you will see, case for gold weaken further.
For the Indian markets, Chirag, what would those calculations be? Because we're looking at 82 to 83 kind of rupee holdings as of now. Are you putting any calculations, number out for the Indian rupee too?
So we don't do rupee forecast, but in a sense, our sense is that the kind of rupee depreciation that we saw last year, that may not be the case this year. We do not see rupee depreciating, quite significantly in that sense. However, what is likely to happen is that the gold weakness and rupee holding steady could actually bode well for the Indian market.
How about silver then? And we've seen prices decline on that one also quite sharply. For the Indian markets as well, it has been nearly 3,000 to 4,000 rupees of prices coming off from the kind of highs that we already made for 2023. 24.5 for silver, and then to 21.5 is where we are trading. What's your sense on this one?
So again, for silver, we believe, Manisha, ideally the price range should be anywhere between $18 to $19. You look at, demand has come to a standstill in Indian market, which was last year by far the largest demand market for silver. Demand has completely come to standstill. Our discussions with traders say that there is at least, 700 to 800 tons of silver lying in various warehouses. So in a sense, if silver, prices we expect to come down to $19 to $18, and then demand will kind of see a recovery.
Are you seeing any festival buying at all, or the wedding season that is ongoing? And with the kind of decline that we are expecting in sense of prices, do you see that supporting demand?
See, if we look at demand comparatively from Jan to Feb, then yes, there is a bit of recovery which has happened. But if you actually look at on a comparative on a year-on-year basis, at this moment, demand is weak compared to last year. However, there is a bit of pickup in demand when you compare it on a Jan to Feb basis.
All right, Manisha, thanks a lot for that. Thank you, Chirag, for joining in and giving us those details. In fact, 2 rate hikes is what the street is factoring in right now. But the market's doing just market things. Moments ago, the Nifty was in the red, and now it has moved into the green. And that's been led by the Nifty Bank, where has been a sharp recovery. In fact, the Nifty Bank is up around 120 points from lows in just the last few minutes, or still sitting at the cut of 70 points, but off lows. So expiry things playing out. We take a short break on this note, wrap up on halftime report. On the other side, we have business lunch taking all the action ahead. Stay tuned.